Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have David Wachsman, CEO of Wachsman, to discuss the future of work and talent pipeline in the fintech space. David, it's great to see you as always. Welcome back to Trade Talks. And I would even argue when we think about the future of work and talent, it's not even just specific to the fintech space. We have industries across all verticals competing for the best tech talent.
We really do, Jill. I mean, right now we've seen a positive jobs report that just came out of the US, which is indicative of, at the very least, a kind of a soft landing for what many people thought was going to be a recession with high interest rates and inflation. But the future the talent workforce, especially the high-end white-collar workforce that tech companies are hiring, those people are in higher demand than ever. And we're still seeing wages go up for all of those high-end workers.
What do companies need to do to attract and retain employees to keep them motivated? I mean, to your point, you can basically, write your own ticket in some places.
You certainly can. One of my clients, a company called Nucleus AI, is trying to poach talent from some of the hottest companies in the world. We're talking about the OpenAIs of the world, Google DeepMind, et cetera. And I've got to tell you, they've got great perks at those firms. So just think about what it's like to be an employer trying to go and grab the hottest AI engineers and bring them to a potentially new company. For them to do so, they really need to be able to give something different. If not more money, then something like independence, flexibility, autonomy. And what we're seeing is those are attractive things in far more than just AI companies, whether it's on the marketing side, whether it's in finance, any company at the bleeding edge today needs to be able to go and give accommodation to employees. That's what people are looking for today. And I think that's kind of the hallmark that every HR team that's advanced is looking into.
That's interesting. So you're saying as part of the trend that whether it's a hybrid work environment or more flexible, do you think that's something that is here to stay? I mean, if you have the opportunity to work in a hybrid capacity.
Speaking of real estate developers and commercial real estate brokers, I think it's true that hybrid or at-home work is going to be more and more prevalent. However, I would say it goes beyond simply being able to work from home. People today want the ability to kind of make their own schedules to the extent that they can, work on projects to the extent that they can. And companies that can provide some sort of flexibility beyond simply you can work from home or not, those companies have a leg up in hiring and maintaining the very best talent.
What about the talent brain drain that we're seeing in the US as an example, particularly in the areas, maybe fintech, but let's say blockchain, digital assets and so forth? It seems to be that there's almost an exodus out of the US to other areas of the world.
Well, between difficulty with immigration, there are far too many PhDs that leave the United States simply because it's hard for them to get a visa. That's a big problem. And between that and a lack of regulation and regulatory clarity, especially in the blockchain and digital asset space, it's very easy for employers to simply poach talent that would otherwise be in the US. Talent is willing to move. That's another thing that we're seeing today. People are willing to move to Portugal, to Singapore, to Dubai to get the very best jobs. And for foreign employees, that might be a way for them to also save a lot of money on taxes, because US citizens, even if they work abroad, are going to go and get or pay US federal tax. But that's not the case if you're a citizen of another country.
Yeah. Well, I think if you think about it long term, particularly in the capital market space where, you and I play, we're known for having the most liquid, most robust, the most access to institutional investors. But I think it's a bit short-sighted if we're not thinking about how economies are digitizing and there are newer ways for capital formation. I think we need to think about that in terms of immigration and getting our regulatory ducks in a row, if you will.
100%. Look, it's going to be a lot more than simply interest rates coming down, which of course helps out the VC space and helps out capital markets. We saw the run up in equities in 2021 with interest rates near zero. Look, that helps that macro environment. But there's no question, if you have regulatory uncertainty, companies are not, and investors are not going to put real money down on businesses. And so jobs are simply going to go where the money is. It is a sincere and serious problem that the US faces today. And if they can't get their act together on the policy side, if Congress can't get anything done, then at the very least, regulators need to come on, step in, provide clarity, and allow companies to simply work.
All right, David, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.